Welcome back, everyone. This is Makuchaku back again. Sorry, I've been little bit off the scene. Real life gets in the way of trading, but back with a new video. So today we are going to discuss what are gaps, 2 candlesticks gap, 3 candlesticks gap, and how do you use them and what do they really mean. To understand this, think of an elephant jumping into a child's pool, like the small pools that you get like you can buy from a store and put water in it. What if you had an elephant's foot stepping into it? The water is going to splash out, right? The gaps represent something very similar in trading. When a large institution steps in, they leave footprints behind that we can see on the charts. So let's actually, the truest form of a gap is actually a physical gap where price jumps forward without leaving any price tail behind. Let's go to Microsoft's chart. Just picking up some random company, nothing to do with the trading aspect of it right now. But if you look at this chart, you can very clearly see that there is just no price action between these areas. It's just missing. And when you see something like this happening in the market, there is an immediately creation of a bias that happens in the market. Like imagine if you were at this point, you had no other way to evaluate but just looking at the gap. What would you think? Is this bullish price action or bearish price action? Obviously it is bullish. A giant bullish elephant has stepped into this 1 hour time frame on Microsoft chart, and then this happened. Somebody just did a market buy. So if we know this, that the truest form of a gap is just missing price data and it shows us the bias where the price could head next to, then we can use this information. Now let's see how we can use this information on a forex chart. Let's go back to AUD USD hypothetically. Now if you look on this chart, this is a blank naked chart. I have purposefully removed super order block and the liquidity indicators from here. And let's say the price was here on this time. What would you think the price is? Is it bullish? Is it bearish? Is it showing any form of institutional sponsorship, a big trader stepping in or a bunch of big traders stepping in at this price? Of course, yes. This is not the truest form of a price gap. There is still price data in here, but it is a gap which is not covered by either side. If you look at the previous candle, which was this one, and then the next one that will probably print after this, you can clearly see that when price crossed this area till this area where it closed, there is no other candle overlapping to the left side. Obviously the right side hasn't printed yet, so you don't know what's going to happen over this side, but on this side the previous candle clearly broke out. When a candle breaks out of the previous candle, it creates a two candle fair value gap. There is lack of fair value presented in this candle. Potentially all buying. And we can actually see this on the lower time frame. If I zoom into this candle and look at 5 minutes, you can see this yourself that there's only buying happening in this candle. Going back to 1 hour, let's play this forward. Look what we have here, another 2 candle fair value gap, where this particular candle, this one, this one broke out of this candle's high, and it is again created a scenario where there's potentially just one side being offered, which is just buying being done. There is no selling in this candle, or at least not visible here. And if we peek into the 5 minute, alright, let's peek into 5 minutes, and you can clearly see there's just been buying going on in this candle, nothing else. Going back to 1 hour. So just to recap again, when there is a difference in the price, for example, this is one candle and then there is the second candle, this area where there is no price offered at all is called a true gap. It's really a price gap. However, when the candle breaks out of the previous candle's high over here, which would have been here, then this area creates a 2 candle fair value gap, because the fair value is not offered. There was practically no sell side being offered in this area. And if we happen to have another candle here where this third candle did not meet the low of this candle, the high of this candle's high and this candle's low did not meet, it's a further confirmation that this area is another fair value gap. This is called a third 3 candle fair value gap. So just recapping, there are 3 types of gaps that you would potentially see in the market. This will be this area here would be a true gap. Then this area would be a 2 candle fair value gap. And then on this setup, if you were to add a third candle on top of it, this area then becomes 3 candle fair value gap. And let's actually mark these areas so that there is no confusion at all. Let's color it a little bit brighter. All right. This is a 3 candle fair value gap. This would be a 2 candle fair value gap. And this here is a true gap. Now, obviously, it should be intuitive at this point that both the true gap and the 2 candle fair value gap require only 2 candles to be formed. And then obviously, this requires 3 candles. So there is more time required to confirm a 3 value gap. And this is the key. In trading, everything is based on probabilities. Yeah, sure, there could be a probability that a next candle could come if you're in a two candle fair value gap, and completely smash this candle down and create a reverse order block. So you see where I'm going with this. When you have a 2 candle fair value gap, it is a very strong indication that this might develop into a 3 candle fair value gap, and the price could continue forward. So you can either catch the continuation here, or the price would come down and catch it here. Let me actually draw it. And this will work exactly for the gap as well, a true gap. So I'll just remove it from the picture because it's basically the same thing as a two candle fair value gap. So how would you trade a two candle fair value gap? When you see a 2 candle fair value gap, your anticipation is that price is going to come down, reject from somewhere here, and form a continuation trade over here, in effect revealing a 3 candle fair value gap in future. And your anticipation is to catch this leg of the trade when you're trading a two candle fair value gap. In a 3 candle fair value gap, since this gap area is already given to us, our anticipation is that price is now going to come down, form a rejection here, and then continue in the direction of the 3 candle fair value gap. The important thing to note here is both are providing bias to us, bullish bias in this case, bullish bias in this case as well. However, this provides the data in only 2 candles, while this requires 3 candles to print. So if you were trading this, let's say on a 1 hour or a 4 hour candlestick chart, you can obviously see the benefits of thinking about a 2 candle fair value gap. But this also comes at a cost. As I said earlier, if this was bullish price action, nothing stops price to completely reverse from here and just completely create a bearish order block in this case. However, in this case, you are given a bullish structure. In this case, in the 2 candle fair value gap, the bullish structure is still forming. Other than the probability of this conforming into so this is a higher probability bullish structure, this is a lower probability bullish structure, this is slower developing, this develops pretty fast, only 2 candles required. Trading both of them is pretty similar. You anticipate retracement back into the gap and then continuation forward from there. So let's look at some examples to understand what this might mean. I'm going to bring in there's AUD USD 1 hour, and I'm only going to turn on the fair value gaps because that's, in this case, that's the only thing we're looking at. And let's see what happens when price starts from here. And I totally see what's going on in the price, so it's not like I'm anticipating price in real life, but I'm trying to show you how to use this information. So we are starting from here. So price hasn't done anything, neither it has created a bullish or a bearish 2 candle fair value gap, nothing to do here. Okay, now this is interesting because I think maybe it did create a 2 candle. Yeah, it did create a 2 candle fair value gap over here. As you can see, price moved beyond this last red candle. Oh yes, another interesting thing to note, this is also an order block. So all order blocks are 2 candle fair value gaps. You can clearly see this printed. So this is a 2 candle bullish fair value gap, and an order block. This is a 2 candle fair value gap, bearish fair value gap, and an order block because it is blocking this large up candle. This is blocking large down candle. This is blocking this doji candle, down candle. But sometimes 2 candle fair value gaps also represent continuation trades, where you can see that after a up candle it formed another 2 candle fair value gap, 2 candle fair value gap, 2 candle fair value gap, and then at the end it formed an order block and a 2 candle fair value gap. So there are multiple representations you could attach. So anyways, let's continue. Till now, obviously when price was coming here, we could visually see the structure was bearish, and now we can start seeing that the two candle fair value gaps and the order block have started now forming. And I'm just going to mark, the 2 candle fair value gaps, the low of them in the bullish structure. I'm careful about the low of a bullish 2 candle fair value gap, and let's see what happens. All right, another one. Okay, neither it's a bearish fair value gap, 2 candle, neither are bullish. Let's continue. Nothing. Ooh, look at this. This is a 2 candle fair value gap. This will be an order block when the next candle prints, and this might also develop into a 3 candle fair value gap. I don't know. Let's see. Okay, didn't develop into a 3 candle fair value gap, but it did develop into a 2 candle fair value gap. Now this could develop into a 3 candle fair value gap. I don't know. Or this could be completely reversed, forming an order block. Boom. So I think it is very evident now here. This 2 candle fair value gap developed into a 3 candle fair value gap. So if you're a buyer, if you were wanting to buy in this bullish structure and you were waiting for a 3 candle fair value gap, you would have to wait till now for it to be confirmed. While if you were a 2 candle fair value gap trader, you could have had some trading opportunities in this area to catch this rebound again. Regardless, now this area is a 3 candle fair value gap. Let's continue. Okay, we got another 2 candle fair value gap, which has a potential to form a 3 candle fair value gap. Let's continue. I don't know. Yep, our 3 candle fair value gap was confirmed at the formation at the end of this candle. Let's continue. What happens? No change. No change. All right, something interesting. Now 2 candle fair value gap has now started forming in opposite direction, but look what it is interacting with now. It is interacting with this bullish fair value gap, 3 candle fair value gap, and you can see the price will continue playing, does whatever it needs to do, but it keeps on repeatedly forming these 2 candle, 3 candle fair value gaps. 2 candle fair value gaps are either order blocks or just continuation of the same side of the buying or selling, and they have a potential to be converted into a 3 candle fair value gap. So I'm going to show you another interesting trick, and I'll probably explain that in a future video. Let's go to a random time. I have no idea where I'm going. I'll just go back in history and select a random time. This is something I'm still developing. The idea is not fully formed yet, but well, since we are discussing 2 candle fair value gaps, here we go. So the thesis is that when you have a 2 candle fair value gap developed, if the low of that candle for a bullish structure or a high of that candle for a bearish structure is not broken, the bias will continue. Let me repeat that again. If you have a 2 candle fair value gap like this one, in a bullish structure, if the low of that candle is not broken, and in the bearish structure, high of that candle is not broken, then the bias will continue. Potentially, probably. Let's do it. So in this case, we have this candle is a 2 candle fair value gap. I mark the low. Till this point is not taken, let's call it bias, positive bias. Till this green line is not broken towards downside, I'm bullish. Okay, and I'll continue to advance this line up as a new 2 candle fair value gap forms. Let's see what happens. I have no idea what price area this is. I randomly selected this, so let's see. Okay, so now this is a new 2 candle fair value gap. Let's continue. Oof, now this candle broke this low, so we are going to change our bias and say, now we are in a bearish bias. Let's continue. No new 2 candle fair value gap, nothing to do. Okay, we have a new one here. Till this high is not broken, I'll continue to be bearish. Voila. You can see here I have not applied any other technique, no premium discount, no order block, nothing, just determining purely bias for a cool second. We are still bearish on this one till this gets broken over here. Boom. All right, now the bias changes, and this could keep on flip-flopping, but this is a very succinct tool that you could use in your trading to quickly understand what type of bias a particular time frame is presenting to you. And you can see how this works. I'm not doing anything else. I'm just following price based on if it creates a 2 candle fair value gap, nothing else, because we've already determined that 2 candle fair value gap is the fastest way to determine a gap. It's not the most highly probabilistic way, but it is the fastest way. And we have a change of bias right now. Actually no, our bias line was here. Till this is not broken, I'm not bearish. Okay, now I'm bearish. The last line was supposed to go here. It has been broken. Now I'm bullish. And you can see this will just keep on continuing. So this is not the gold mine. Don't use it as this information as is tomorrow in your trading structure and start trading off it trying to determine bias. In a future video, I'll explain how to use this concept from a multi-time frame perspective, so that, because the lower time frames are always delivering price into higher time frames objectives, and once you unlock that insight, the determination of bias then becomes a tool for you to understand when do you have to wait, when are you trading against the bias, when are you trading with the bias, and when should you go in aggressive. So just recapping once again, a 2 candle fair value gap is when a particular candle, this candle breaks out of this candle, and then this area is the 2 candle fair value gap where you can anticipate continuations from, and a 3 candle fair value gap is a structure where you have a third candle involved, where the definition of the gap is this, and the differences being this is fast, only 2 candles required, but lower probability as price could be completely reversed from here. However, in 3 candle fair value gap, it is slow as 3 candles are required, but potentially higher probability because more time has passed and it is a better conformed bullish structure. Plus, you can apply all sorts of areas of discount and premium to get a better trade. In the terms of how this has to be traded with the signals from the bot, it's still the same. You anticipate in a 2 candle fair value gap, as discussed, price to come in here and then go forward, and the same thing here, price to come back in this gap and then go forward. And these are the areas where you will find your trade setup that the Discord bot will alert you for. In the next video, I will try to explain more about the multi-time frame nature of how to use this information of the bias determination that we just discussed, and hopefully it will help you more to crystallize what you're doing. Hopefully this video was helpful. Until next time, take care. Bye.